Well, you can't get much better than that as far as a prediction. I drew this line about a month ago now, actually almost exactly a month ago, on where I thought the S&P 500 was headed, and I gave some justifications of why I thought it was headed there, and I'm going to recover that now that we've let this prediction bake, and it is pretty amazing how accurately the price action actually followed it. Now, in a previous video, I did say I didn't think that it was going to continue to follow it 100% like it was, where we literally had the price action crossing through and following this line, this red line right here, which is what I drew. And although it didn't follow it 100% continuing, because I don't have a magic 8-ball, and that's literally the only way that you can do that, I am going to explain how I got pretty close and why I only drew the line to right here, which as of today is pretty darn close to that price action as far as where we're ending. I drew the line somewhat arbitrarily around 415.02, and our price action right now is at 417.53. So I'm going to zoom out right now, and I want to show you something with this market bias indicator, because this is the first and foremost most important indicator that I have as far as my setup, because it is very reliable. And by the way, after I cover this, we're going to get into Bitcoin and some other key stocks that a lot of you guys follow. So just make sure to stick around through this. But I just want to run through this real quick because I want to help you guys out as much as possible. So as far as the market bias indicator, the best thing really that this indicator provides is a pretty reliable support and resistance. Okay, so when I drew this line, we were approaching the market bias indicator. I actually, if you go back to the videos, I drew a slightly different one a few days earlier, and I drew it on this date of the 20th, and then about a week later I drew this red line, because it looked like it was a reversion back to the mean, right? Back to the average. Stocks are overvalued and then they become undervalued, and then they're overvalued and undervalued again. And that's what simple moving averages are for and everything. And the larger time frame that you have, for example, for a simple moving average, the more the price action is going to separate from it before it then goes back to the mean. This HA market bias indicator stands for Heikin-Ashi market bias indicator. And the HA, the Heikin-Ashi, is designed to smooth things out a little bit, because the problem with moving averages, you can see, above, below, kind of crossing. And so the issue you have with the large indicators is they'll cross above, and like, let's say you put on the Bjorgum multi-MA and you had it right here, it would have been red while the price action was under it. And as soon as this price action went above it, it would have turned green, and that's an issue. You want to smooth that out, and that's why this indicator is so powerful. In addition to it, it's a market bias indicator. It is speaking macro, and that's where you want to start with your indicator. You want to start broad and zoom in. Time frames, you want to start broad and move in, right? And so this has, I don't know its exact settings, but it's going to be somewhere around something what a 200 moving average, simple moving average would be. So my point of all that is that it, in the end, is reliable as far as a ceiling and as far as a floor. And the price action is going to test it. And what happens after the test determines where the future price most likely is going to go. So, for example, this right here, this price action was treating the market bias indicator as a ceiling until it came up and came down and finally retested and a bounce off of it to then finally get the run. There was technical indicators showing that we were reverting back to the mean. Just for one, we were so overvalued. I mean, look at this separation. You had 457.78 was the price action when the market bias indicator was at 411.59. That is a huge difference, okay? Considering that we're basically separated by $1 at this point. So we're about fair value, which is what we want. On any sort of stock tickers that are going up, the S&P 500, Apple, Microsoft, that are just historically going to go up. And if they aren't going up, at least all together, maybe one of them has something happen, but if all of them are going down for years to come, we have bigger fish to fry than your little account, because Apple, Microsoft, all of those blue chips, Google, are going to relatively go up with periods of opportunity. You can call them a bear market. I'm calling it a period of opportunity. So the reason why I stopped my prediction here is because what the market does after this is going to be very important. We can continue to move down lower. That is always a possibility. If we were to come up, which eventually you're going to, right? You have high, this is clearly a downtrend right now. It's a micro downtrend, but it is clearly a downtrend. You can see that reflected on the MACD. You're going to have the low point, the high point, but the high point's going to be a lower high. Then you're going to have a lower low. Then you're going to have a lower high. Then you're going to have a lower low, right? Until you get back to that mean, that average. From there, what we want to determine is one of a couple of things. Are we coming up? Let me go back just real quick before we do that. I'm just going to get rid of this guy right here. It was a great prediction, but it's time to move on. So let's go back to the drawing now. So what we have here is it can continue down for a certain amount of time. And when we have that bounce up, are we bouncing off of this market bias indicator or close to it? Probably. Is it now a bounce off to a higher low? If that is the case, we will continue to retest it again. It is very similar to this, right? Retest, 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 support, and then you had all systems go right here. We talked about in previous videos, this, according to our setup, March 31st of 2023, when the price was at 408.04, that's a buy signal. We said this was a buy signal, and it reached all the way up to 459.56, okay? So what this now is going to do is it's probably going to trail around like this for a while. And when this price action comes down and comes back up, the next low is going to be important. Is it going to continue to use this as a resistance, or is it going to bounce back up? Now, at the end of the day, that is only one of a few things to look at, right? But to simplify it mostly is this market bias indicator now going to be a resistance? Is it going to turn red? Is it going to constantly be retested? What are the lows when it is retested? Is it going into higher lows, which is kind of pushing and squeezing? So, you would have something like let me just bring the drawing back right like this. I guess it's already there, and then erase it. Are we squeezing like that with those those higher lows, or is it a bounce off and then all the way back to the downside? So the first thing to pay attention to is something for an entry position. This guy right here, let me zoom in. get back to that. Here we go. Get rid of this guy because that's just going to be confusing. This right here is an entry for a short off of like a reversal. It's easier to see if you bring up Heikin-Ashi candles. So you're looking at red, 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 right? Green, 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 green. Now you have a red, and a lot of people play 2 reds in a row. So 2 strong downtrends candles. That is where you enter for a short. And then you set a stop loss appropriately, whether it is some percentage above that high, that lower high right there, or are you playing indicators to where it's going to be when the market bias indicator, if it was red at the time, turns green again? Is it going to be, above this right here, which would be a little bit more risky, but it gives you a lot more room? Those are all things that you are going to have to work out as a trader. But that is just something to think about. That is something that I wanted to point out because we've been following this. If we are just going to simplify it even more, to really just simplify everything, there's trend line here, trend line here. We're going to get rid of these. And until this breaks, we're in a downtrend. Now, it is slightly early because technically we're still over the market bias. We're not over the market bias indicator, but the market bias indicator is green. But everything else is showing a downtrend, right? And you're not always going to get all of your indicators to line up perfectly. So if we just run through this really quick, for this setup, the simple moving average, the yellow simple moving average for a downtrend has to be above the blue simple moving average. Well, technically the yellow is an exponential and the blue is a simple moving average. So we're one check there for a short. We want the MACD. Whoops, that was the opposite of what I wanted to do. The MACD line, which is the blue line, has to be below the 0 line, which we do have, and that is reflected on these little triangles. All this triangle is showing that the MACD line is below the 0 line on the MACD. It's just easier for me to see, so there's something I quickly created. Green is the opposite. Green is above the 0 line. Now, the MACD line is the blue line. The signal line is the yellow line. And what we're following with these triangles is the blue line. The market bias indicator, so that's another one. So that's 2. 2 of 2 so far. Market bias indicator, the price action doesn't have to be below the market bias indicator, but it should be red. So we're 2 of 3 right now because the green market bias indicator is still green. It is weak. So you see the strong line right here, there, the bright greenness. That's a strong uptrend. And then this is signaling weak. So this is a potential reverse. It doesn't have to reverse. You can see moments where it just is saying, hey, this light color is showing that right now we're acting as a resistance and now we're clear from it. So we're 2 of 3. I would say just maybe slightly early on the third instead of completely just saying that it's not showing any signs of a downtrend. And then the Trendillo is also showing very similar to a MACD or RSI. It's showing a downtrend as well. Below the 0 line, very similar to a MACD, but below the 0 line, indicating downtrend. What I actually like to do, you can do this with the MACD too, actually, but on the Trendillo, hit logarithmic. Now look at this. It's just easier to see. You can't see these trends like higher highs and higher lows really. But what you can see is kind of like when to buy and when to sell. So for example, let's say you're under the market bias indicator and the market bias indicator is red, so you're looking to go short. As soon as that crosses below the zero line, that was right here, which can actually very conveniently here, it also crossed below the zero line on the MACD, and you can ride a short all the way down, and you can ride a short all the way down until it crosses back up. But look at all that you kind of erased there. So you can do a certain percentage. Again, it's tweaking. It's risk to reward. That is all very important. But where we are right now, I'm just going to get rid of these trend lines here so you can see it on the logarithm for the Trendillo, is we are in a downtrend. So that's 3 of 4 for a downtrend. And if you were to just hide, let's just hide all of these here. It's always good to, you don't want to erase everything, but let's hide it all. Let's get rid of everything. And what is it showing? Let's hide even that. And let's just go big here. So if you were to take away all of those indicators, what are you seeing? Fix it a little bit here. You're seeing a downtrend here. You see a break of the downtrend and an uptrend here. And now you see a break to another downtrend. And what's really easy to see when you actually just get rid of all those indicators and everything is a head and shoulders. Head and shoulders is very actually important because you can get crazy with all different kinds of patterns. Sometimes they work out, sometimes they don't. At the end of the day, a head and shoulders is just, you're always going to have the price action go higher, low, higher, low, higher, low, higher, low as it rises. And you're going to have it always go high and low, high and low, high and low, high and low as it goes down. So what that means is when you actually have a change of trend, you're going to get the head and shoulders, right? Because here's a higher high, here's a higher high, and now you have a higher low. So we had a head and shoulders right on this day. Let's see when you would. I'm going to zoom this in here so I can see this a little closer. This day right here, 9/7 would be when you would technically get in. And you would technically have, if you're going off of the 2 candle system, which would have been about, let's just say you put it right, 444, and you could have shorted, to be very conservatively, 434, which would be great for an option. It'd be good for a spread, or I don't know, $10, I guess is pretty nice for a month. I don't know. So let's put everything back and let's go over the Bitcoin, because Bitcoin has been doing quite well lately. And I'm going to go back to the actual candles for a second. Now, Bitcoin currently is down today, 1.44%, but we are at 34.62. Let me see if I still have my drawings on this. Yes, I do. So we're going to zoom out here, go to the weekly auto log. There we go. Now, what I said before, again, I drew this. I don't know when I drew this. It was probably a month or so ago. We were talking when Bitcoin was at 26,000, and I said the perfect time to buy would be about 16,000. But if at the end of the day we go back up and we go to like 85 and beyond thousand, does it really matter if you're at 16 and at 26? Obviously it could matter, but you could also miss the boat there. It could never go back to 16 again. So don't get too greedy on the opposite side where you're not buying at all. With that said, we, for the first time on Bitcoin's weekly, have a red market bias indicator. I encourage everyone to go to Benjamin Cohen's channel. He gets way more in depth on how Bitcoin and just the overall market reacts to the halving, which I don't know much about, the crypto market and how exactly it reacts to the halving. I encourage you to do more research on that. I'm doing it currently myself. He also talks about how everything kind of relates to political years, all that kind of stuff. Now, those are important, but at the end of the day, they're just one indicator, and you still have your indicators here. You could technically trade in a vacuum with just indicators and not going off of news and macroeconomic trends. You would obviously have somewhat of a disadvantage, but nonetheless, you could do it. So I arbitrarily drew this line about a month or so ago, just to provide an example of, does it really matter if you're at 26,000 or 16,000? So far, it seems to be following that. With that said, we are still red on this market bias indicator. There are a lot of people that are suggesting there's going to be one more downturn in the market, the crypto market, before everything actually kind of goes right next or into the next bull run. And the S&P 500, Bitcoin could follow it. It actually decoupled from the market very recently, which, it was following S&P 500 for quite a while. And you can see that, the S&P 500 is down today, but, or down on the week. But you can see Bitcoin overall on the week is up significantly. We'll see how everything settles. Let's go down to the daily. And we're going to hide these. Now, the reason why this spiked because technically, like from a technical standpoint, I'm saying this. Now, not everyone obviously follows the market bias indicator, but they're following other indicators that are showing similar sort of patterns, right? So we turned green recently on the market bias indicator. Traders love that. We are above the zero line on the MACD. Traders love that. The two moving averages are signaling it is all systems go for buying. So what's probably going to happen is a little bit of a settlement. Maybe, I guess all those tries are going to come back up, but maybe something like that. And if there's that bounce up, it's a good opportunity to buy on the daily. And then, it might be a good idea to then just follow it on the weekly and follow the HA market bias indicator. It's not going to turn green as quickly, but once that turns green, then it's smooth sailing. If you get a rejection on the weekly and you come back down, well, then you're probably going to have a red on the daily for the market bias indicator, and it might be time to maybe sell out and just wait a little bit. But I also wanted to bring this up because if you bring up the MACD, we talked earlier when we were on the daily about what actually triggered this. You can see on the MACD, this cross reflects this day right here. So who's to say when that happens? Are you staring at your screen for it to happen? No, but one candle later isn't too bad. You might just have to kind of ride red for a little bit because it might consolidate a little bit and then move on. Let's take a look at Nvidia real quick. Let's see what that's doing. So it's been hanging out right here. We technically have a head and shoulders, right? So, and it's down 4.31%, pretty significant. On the weekly, let's go to the daily. That kind of shows this a little better. So we are reverting back to this mean. We are going back to here. It was quite a run. I missed it. I wish I wouldn't have missed it, but I'm happy this is happening because I'm not going to miss the next one. So that's the video. We clearly have a head and shoulders right here. This is a downtrend. And what we're following right now is this. And zoom in a little closer because of the arrows. Let me just get rid of the arrows real quick. Just trying to see it very clearly for you. There we go. And then you got this right here. You could technically draw this as well and look for squeeze, have it like that, and then a squeeze either to the upside or to the downside. So that's all I got for you today. That is the S&P 500 and my prediction that I made about a month or so ago that played out pretty well. That is Bitcoin. So far, I made a very arbitrary prediction on Bitcoin. So far, it's trending that way. I do think Bitcoin is headed for a little bit lower, just because I also think the S&P 500 might have another downturn in the near future, couple weeks, couple months. I don't know. A lot of it, I think, depends on the housing market and how the overall market is going to react to finally prices being dropped. And then that's Nvidia, and how I completely missed this rip on Nvidia. Actually shorted it for a little bit back here, lost a little bit of money, but saved my pants because I got out before earnings right here, because that's what I preach. Unless you got some inside info, you should probably get out before earnings. And that's what we got. We're going to be back soon with another video, but if you like this one, please like it. It's the easiest way to help out the channel. Helps out tremendously with the algorithm. If you do like this content, just hit the subscription button and the notification bell so you can see all of my latest content. Till then, we'll see you next time. Thanks.